I have no idea what you're talking about, but let me say good afternoon.
Hi.
Good Arvo.
Where are you, Aaron?
I'm back. Well, I was about to say home, but there's two homes. I'm at the old home, and I spent the morning at the new home, and then I just got back from the dentist. So this side of my face is numb.
So your new place has settled.
It's settled. Hey, sound effects are working.
Yeah.
Yes, it's settled. I got the keys late yesterday, and moving on Friday. So that's exciting.
Moving on Friday. I prefer to just burn everything to the ground and start again.
I'm kind of at that point. We've chucked out so much stuff. We've given away a lot. We've sold a lot. And there's still, I'd probably still set fire to 50% of what's left. But it'll be good once we're in. It'll be good when we're in.
And what have you been up to, Ash?
I'm feeling a little chaotic this week. I feel like I've been literally running around in circles. Yeah, real mixture. So Stone and Chalk brought me in and I brought in a cyber expert, and we co-delivered a founder two-part series on AI governance and cybersecurity. And so we finished up that yesterday. And so that was 2 4-hour workshops. And I literally finished that and walked into the Equity Clear workshop yesterday. So I had 8 hours of workshops, and then I had to go to a networking event, and it was a long day. And yeah, so it's definitely been a week already, it feels. And then tomorrow, Jack and I are part of a DSD initiative down here in Adelaide. So Jack will be very nervous, and I'll be taking footage, obviously. He will be reverse pitching Tribe, so that'll be really exciting to see. He is in the middle of the pack. There's a whole host of different investors in the room, operators and founders, and then I'll be facilitating the AI panel with a whole host of founders, from Michelle Perkins, Slavia from Fleet Space. We've got Team Gage on there. We've got a whole host of different AI founders as well. So that'll be exciting. And then finishing up with 18 pitches from AI startups. So Jack and I will be coming back with some thoughts and rapid fire, I think, by the end of the day. And then Friday, I think I literally put in my diary, no meetings, do not bother me. I'm on do not disturb in my calendar. But somehow Joe from VU Ventures was like, "Are we meeting for coffee?" And I was like, "Oh, I can't say no. I love hanging out with you." So she said she wanted to chat some mission stuff. So after our catch up last week, so I'll be seeing her Friday morning.
That is awesome, Ash.
That's
and at
awesome.
least Joe is one of those that refills your cup. So
I hope so. And I got asked to go to a networking event tomorrow night and tonight, and I was like, I'm just going to tap out. No. So
that's a fair call. Can you share, like, for the listeners, the equality? What was it actually called, the event yesterday?
Equity Clear.
Equity Clear. Can you just share what that was and any insights out of it?
Yeah. So Equity Clear is an initiative around capturing and analyzing data as it relates to female founders in the pipeline, as well as those who get investors. And so in the room was a mix of government, ecosystem supporters, and investors were the main kind of 3 cohorts for the Adelaide event. And it was to co-design what we think that first step of a standardized data set should look like. It was interesting. I think all of the VCs in the room were already collecting the data in some shape or form. There was generally a difference on the exact language around questions or when in the pipeline that data capture started. So for us, it's really at investment versus we're not looking at the whole funnel. And so there were discussions on when should we start? How should we start? How transparent do founders actually want to be early on in the stage, and all of those questions. And I think it was really interesting that the government table actually outlined more risk than the investors, and we're really the ones that have the most to lose. I think there was a bit of that tension in the room between different speeds at which people operate. And I know we felt that on our table. And then the other piece, which Aaron, you'll love, I had a quite heated debate around the language and choice of where we're starting in the funding ecosystem, and that if we are going to be holistic and that this data is actually going to be useful not only for VCs but for private equity, for banks and for government, then this needs to span not just venture, not just private markets, but needs to be much broader, and really thinking about how you can capture some of that SMB market of, well, how do you capture funding in those, whether it's commercial lens, debt funding, private angels, just giving businesses that aren't venture backable funding, particularly as we have a thesis that female founders quite often will opt for those businesses because they're more rational than trying to be in the 1% of the 1% to have a unicorn business, which was met with, oh, I think you're right, but that's not what we're here for today. So I said my part, and that it's on the grand scheme of where they're taking it, but they're just trying to start with VC as they seem to be the most active as in the funding market, and then they'll move into the likes of private equity and broader into banks, which I then pointed out that female founders actually tend to have a hard time getting commercial banking loans. So maybe, again, expand the ecosystem. But look, it was good to see momentum in the space. Like, it's something we're always talking about that we want to be a part of, and we want to be a part of that broader, I guess, solution. But I was somewhat frustrated in that we couldn't start broader. I just felt like we were doing the same thing and that it might only just have a negative impact.
Good conversation to be having, though. Like, it's great to see it happening. Because like we've talked about for a while, like measuring the statistics across the entire funnel is something that is going to be beneficial.
Yeah. What are your thoughts, Jack? Or you can't even find the microphone button.
I can't even hear you.
For those at home, Jack's only just turned up, so I thought I'd take the piss. But now he's pretending that he can't work out how to use.
We're going to have to lip read Jack.
I know.
Yeah.
The only other thing which would be good to get your...
Oh, here he is.
Here he is.
It was a joke.
What were your thoughts?
Yeah, it was. That's right. Sorry, you keep going, Ash.
No, the last thing was, from a risk perspective, I did flag that unless the data is anonymized for VC funds like us, where our thesis and domain specifics of what we love to invest in, particularly being in that HAS space, in the blue collar replacing paper, we do see a smaller number of female founders or co-female founders. And so if we're reporting against other people in consumer or in that B2C space, we don't want that to negatively attract from female founders applying to invest with Tribe. And so that was one of the key points I said, look, I think having more people involved, but less focused on if the brand name is associated with the data, I think is the first step. And then figure out how to report on a funnel level domain specific. Because I was thinking about that risk of, we don't want to have that negative impact when we're very proud of the female founder investment we've done to date and continue to.
Yeah, absolutely. And we've got a really strong pipeline of female founders. And yeah, I guess we try and do the best we can. We are a function of our deal flow, as much as that upsets some people. But I guess if they get upset, they can start their own podcast. I think that's great, Ash. Anything else to add on that?
That was really good. And Jack, Ash was sharing that you're all excited about talking tomorrow and reverse pitching Tribe.
You got no idea how nervous I am. Like, I'm actually so nervous.
I can tell you're already in a dark shirt to hide the sweat.
Yeah, I'm so nervous.
What's to be nervous about? You could just only, as an emerging manager, totally root our brand and destroy our deal flow. Outside of that, what's
only
to
in the
worry
South
about?
Australian market, it's fine.
Jack, you are going to absolutely nail it. It's going
we'll
to be
see.
authentic, be yourself.
Always have, always will, Jack.
Yes.
I'm looking forward to it being done, to be honest. Hopefully I can report back next week.
I'm going to practice my point after this, Jack, if you wanted to work reverse pitch to me as a practice.
Can you
Somebody ask him about this.
Can you record it, Ash? Because he's going to nail it so well that we'll want to reuse the pitch.
Totally. Oh, Jack can even submit questions for me, so I'm more nervous about that.
I just hope you don't glitch out and then just go like, Helmer 7 powers. Helmer.
Well, that's a real possibility. So it's
That wouldn't be the worst pitch.
Durability. Nah, you're going to be great, Jack.
That'd be awesome.
be prepared for LinkedIn post, Jack. We've got to start pushing your brand back out. People asked me if you were still alive yesterday, so you got to get in the office more.
Who, what, like from the SM?
Yeah, like Josh Garrett and everyone was like, "Where's Jack? What's he doing?" I was like, "Had a baby."
The most asked question I ever hear: "Where's Jack? How's Jack?"
And that's just from his wife. All right, let's get Aaron and I have an event to get to this afternoon. It's the VCDF end of year drinks at Howard Smith. And then my wife and I are going out to dinner, 2 date nights in 1 week. Right?
Was the first one so bad?
Look at you two.
First one was so bad. What, like a redo?
Yeah, like, what did you fuck up?
So let's get. It's a long story, Ash.
Okay, my assumption was right. Okay.
I thought we'd just do a bit of a recap. So the episode we did, Give Yourself an F. I don't know about you, but I got a few messages because, especially with some of the people, it's like, "Were you talking about me?" And then that conversation is like, "No, but if the shoe fits." But for listeners, Give Yourself an F was all about if you this year haven't implemented some basic AI agentry or some kind of tool into what you're doing, give yourself an F because you're getting left behind. But I think some people overcomplicate it, and I just saw this post as a way of what I think is like really quite basic but very high value. So Jackie Villings from Airtree posted, "This week I migrated both my meeting note transcription from Granola," so you guys being Apple, you love Granola, "and my to-do list from Linear to Notion, because Notion released custom agents. Suddenly bundling your docs, databases, and to-do list becomes logical." Again, that's been one of the big themes, right? There's 3 different platforms now in one. And it's not like Granola added something or Linear added something. They jumped to Notion where both of those things were there. My first agent automatically extracts actions from the meeting notes and creates my tasks in my to-do Kanban board, so I no longer forget everything I promised to do immediately after the meeting. Notion went all in at speed, and it's working. The mobile app loads quickly, and the native agent is surprisingly good at understanding natural language and taking the correct action. Now, we're a Notion shop, and Ash, thank you for trying to help me with my personal Notion. It's still a work in progress, but that's one of the reasons my wife and I are going out tonight, because we're co-working on some end of the year life admin in Notion. But to me, it's on one hand, it sounds very simple. Meeting notes, agent, create the to-do list. But you implement that, it is so powerful. And the call to action for the founders listening that has pure play SAT, that to me is a place where you could start. Something that is using your existing functionality to then go and create value for your user. And I just think of our portfolio, and I know every one of them could be doing more. And that's a topic of the conversation. So I thought that'd just be helpful to recap on, because I think that is the type of thing that we're really advocating. And if you don't have the time, the brain space, the expertise to get that done, your version of Notion is going to come and hit you over the head and you're going to be gone.
Yeah.
I call bullshit on the mobile app, so it's not very good.
The Notion mobile app?
Yeah, crashes, kills me, drives me crazy. And Granola has just come out with some really nice upgrades. So I just have my Granola push to Notion, and then I have an agent do that. So
you still have the agent doing its thing in Notion.
Yeah. And we have it where, as a business, we all have Granola. Everyone pushes into a single source of meeting interactions, and so that everyone can have transparency on the calls as well. That way, if like I'm off sick, someone can go in and see my last call. Why I wanted the CRM in Notion was so that I could then have an agent assign those meeting notes within the CRM log, but we have just pulled it out because we couldn't get the traditional CRM function to work the way we wanted to. I think they'll get there, but for now we've gone to an open source CRM called 20, which we found to be very good. It's cheap, it's easy, it fits all the cyber pieces we want, it has good integration. So, but I would love to have it all. I do think there are still some limitations, and I do think Granola is taking notes on what people are doing well, and they are continuing to come out with new things. They just released what's called recipes. So if you have a particular type of meeting you do, like for us, imagine your initial call with a founder, you could have a recipe inside Notion that is, in this, if I haven't asked certain questions, prompt me to ask this. This is the format I then want to have the output from that meeting to be exec summary, takeaways, action items required from the founder, and then it would listen and come back with the output in that recipe. And so they are doing some interesting things to keep themselves relevant. But I do agree that I think context will win in the long run.
But I think that's the functionality of Granola and Notion. I guess also the key point is Notion cutting people's lunch using basic AI stuff, which is what we're really advocating people need to be doing.
I need to set something like this up. I was thinking, Ash, that there was a task. I think you asked me 3 times to complete. You needed some information from me. And I was like, why have I dropped the ball on this every single time? But it wasn't in my Asana. Why wasn't it in my Asana? Because it was on message. And so I was thinking I should be running Granola 24/7 and just listening to all my conversations. And then if it could automatically create the action items. But anyway, that's an aside. But I think this point about...
The only problem is, don't you fear that it would like run a auto execute script just to like remove itself?
Look, it may automatically make an appointment with a psychologist, but that could be a good thing. So,
Wait, but why do we have Asana when you can do most things in Asana and Notion?
I can't believe you said Asana. I thought I was counting down from 10 before it triggered Ash.
Look, Notion is
Our
great.
fractured tech stack kills me.
To the new Notion overlord that will overrule us, it is great.
I use, after Ash's stuff, I've shut down all other ones and I'm using Notion. The only thing that kills me a little bit is that I've effectively got 4 fairly large worlds that I live in, and you've got to go and change instance. And then sometimes I've got to think to myself, hang on a minute, is this thing in that to-do list or is it in that to-do list? Because some of the worlds have a blurred life. And so that's the only thing that is a slight challenge for me. But I just want to make sure that
permission thing. You could just share it if depending on what the permissions and cybersecurity posture is there.
I've got I've got the tribe one, which is different to the other one, and I've got to go between those two. I've still got full access.
Just use the search function,
and it will search all of my accounts.
Yeah.
All right. Well, this has been a good segment of Ash points out very basic items. Anyway, can we come back to the
point,
primary point where you seem to be getting lost in the weeds?
It is a really bloody good point. Like using AI to slightly expand feature set to capture a new customer segment, but also how much are people just churning from one platform to the other at the moment to chase a marginal efficiency gain? Like we're really in this age of discovery, and it just highlights like companies can have great growth, customer metrics, everything, and then all of a sudden one feature shift by a competitor results in churn.
Yeah, that's all one of the big conversations, though, with people that are struggling, I'll reiterate from the last episode, they're trying to go too big, they're not starting off small enough, and they're wanting to code embed bare metal and not bang together stuff to at least get a start. And often that's just because they're tired. And so go and get your energy back somehow. Otherwise, next year, it's only going to accelerate and you're going to get left behind.
Yep.
Jack?
I've got nothing to add on that one, Dan.
You can practice your talking points after the episode, buddy.
Yeah.
At least it's not, my name is Jeff. So let's get into a few things. Aaron, you threw on here, crypto tax policy is about to change in Australia.
Possibly. So this came from Spidey, Steve Dalton, who is an avid listener and a good mate. He was
one of our Sharts today is from Spidey.
Oh, sweet. So he was talking about crypto because we were just chatting about all sorts of things, but he was talking about if there was a change to the tax treatment of cryptocurrencies, then it could actually unlock a whole heap of liquidity in the Australian investor market. So back in May, there was a case in Victoria which actually took the view that the sale of Bitcoin should not be treated as a capital gains tax event, but should actually be treated, they should essentially treat Bitcoin as a currency, as money. And so that hasn't been applied by the ATO, so that people were talking about this for a long time. There's still been no change. There's supposed to be an appeal. So I think the dust is going to settle over a long period of time. But if that change did happen, where cryptocurrency under the tax law was just treated as a currency, and therefore selling it wasn't treated with a capital gains tax event, Spidey's point was there would probably be a whole heap of people liquidate some stuff out of currencies and shift it into other assets, particularly VC, given the nature of a lot of those crypto holders. So I thought it was a good point. Like, it's an interesting one.
Can you see the government letting that happen though?
Probably not. But it would be bloody good if they did.
It would be good. I watched Joe Aston has launched a new podcast series and the first one was with James Packer. Fucking good.
Did you listen to the whole thing or just the highlight?
Yeah. No, the whole thing.
I'm going to have to listen.
How long was it?
Hour and a half.
Where do you find the talent?
Is that why I'm having 2 date nights this week? I don't know. I love the story behind the story. Anyway, there was a conversation around the tax office and what have you, and there are special groups. I just wonder if they would let that happen.
The interesting thing, though, is if it goes through the courts, it's not really then the ATO. They can come in later and re-regulate. But if it goes through the court system...
Yeah. Well, hopefully. Fingers crossed.
But look,
I'm now stuck on Ash's question of where do I find the time? Well, most of it is sitting in the car driving, but...
Yeah, driving. Useless.
Yeah, you see, you don't have a car. You don't understand.
I do now have a car, thanks to my dad.
Really?
Yeah. Well, I inherited it.
Do you drive it?
Yeah, a total of maybe 35 minutes a week.
Oh, that's more than I'd expect.
It's podcast time.
Well, that's literally because there's currently some roadworks in Glenelg and I have to go from Glenelg North to Glenelg South. And it takes as long to drive as walking currently, but the weather's still shit here. So I'm driving. But after it'll take me 3 minutes.
Nice.
It's not enough time to get into flow, Aaron, on the podcast. You just get to a good bit and then you're there and you're like...
You don't have to get out of the car when you get to the destination. Just
sit there. Well, let's any money that can come from a speculative asset class will hopefully partly go back into a speculative asset class. So let's fingers crossed it. But you also found some data around valuations out of the US, but I think there's some relevance here.
Yeah, so this was from Peter Walker looking at data of raises between 500K to 1 million, and it actually analysed safe notes over a 12-month period and looked at cities of the US, but there's also some data in there on elsewhere in his set around other cities as well. But this was US data. But the point of it was, like, where you raise can actually determine the size of the round and also the valuation. So one of the data points was that the top 25% of companies by valuation or investment rounds in the Bay Area, basically you can't correlate that to anywhere else. Like, it's just like an outlier valuation event. And it just highlights the point that there's not one national market. So often as Aussies, we might look at the US as one market. But really, when you look at entering a market from a go-to-market strategy or from raising capital, it really is like 50 plus markets. And even then, down on a postcode level within some cities, even it can be, its own little market with its own nuances. So the data's there. We'll share the graph in the show notes. But it just still shows that even post-COVID, with a lot of the reallocation of the capital across the US and what Steve Case described as the rise of the rest, we're still seeing the biggest valuations coming in the Bay Area. We're still seeing the majority of capital being deployed there. And then it really is a step down to the rest. So second listed there was Los Angeles, New York, then Denver/Boulder. Another standout was Seattle. But where you raise in the US really does have a big influence on your valuation.
What do you think? How do you think that maps to Australia in terms of our cities?
Val by cities? I'd be curious. Like, I'd have to, like, anecdotally, I would think Sydney would command higher val by density of investors competing for deals.
But I mean, you'd have to classify investors like angels versus instos, just because everyone has a different appetite for the entry.
Yeah, I think so. And also the data will get skewed of the type of deal that's coming out of those locations. And what's interesting, us being IoT based, it does seem like that is skewing to more regional places because regions seem to have more stuff that needs to be digitally controlled, monitored, and all of that.
Yeah, that's a good point.
Well, speaking of valuations, there was an article in Capital Brief by Bronwyn Clune that came out that said Blackbird writes down Culture Amp SafetyCulture as Airwallex and Eucalyptus shine. At a closed-door briefing for its own investors, the nation's largest VC had provided a glimpse into the performance of the country's top startups. The country's latest venture capital firm, Blackbird Ventures, has marked down the value of its holdings of Culture Amp by 23.5%. That is a big write down, and it was last episode that we spoke a lot about our views on Culture Amp, so probably not surprised there, but said it expects Airwallex to double its revenue to $2 billion, so 3.1 billion within a year if its current trajectory persists. Let's just pause there. Talk about a juggernaut.
Yeah, like double at billion-dollar revenue marks, like that multi-billion-dollar revenue marks.
But it could have easily been portrayed as a juggernaut that VCs were deploying to just to get the management fee without looking under the hood. But then, just listen to the podcast of Harry from 20VC. Like, they all saw something. They've all jumped on a rocket ship that, to many, looks like it had already taken off.
Yeah, I think it was on one of Harry's episodes. But the thing that I've been really looking at is that concern around price is actually a concern around conviction. And the conviction is either on founders, TAM, whatever it might be. But when you really get conviction and you really get an understanding of all of those types of things, in the moment, you just got to be comfortable to look stupid and go with the vow. Something I've become reasonably comfortable with.
This is a little bit off topic, Don, but I think that also applies to founders. And going back to the last article, we sometimes see founders get in their head that I'm worth this much if I raised in the Bay Area. But the reality is you're Australian-based founder and you've got no customers, you're not raising over there. Like, you're raising from Aussie VCs. They've got this expectation of what they're worth. And I think, like, your point around price and like conviction on what this thing can really be, if we're arguing over a 10 mil entry price versus a 15, it's actually tiny in the scale if this thing takes off.
Yep. Yeah, absolutely. And then our job, given our current model, is to really be able to communicate that effectively to LPs, get them engaged. But one of the reasons
I was just going to say, add to that, Don, not just LPs, but co-investors as well. Like having to help price or valuation sensitive co-investors on that journey.
Yeah, but it's been interesting. We've been on both sides. We've been on we believe we need to peel back the vow, and we've been on no, we're comfortable. This is a reasonable vow, and each of them.
But do you go back to conviction, Don? Like, do you think it's equal conviction on both, or?
Well, it's just something that's it's playing more on my mind. If I find I'm concentrating lots on the vow, I now try and catch myself more going, hang on a minute, is this a subconscious conviction issue? Because if it is, you should separate vow and maybe not do the deal.
Yeah, agreed. I think there has to be an element of subconscious bias there. Because if you truly believe this was the next Canberra, vow doesn't matter. Like, we're talking the difference of 10 to 20 mil vow. It means nothing in the grand scheme of things.
True. But I cut from the show notes just because of limited time, but there was a guy who posted, I invested and owned 25% of a company from 2004. It's just been sold for 16 times net profit, and I got $3,000. And it was just been 20 years, but his dilution and all of the different factors has totally fucked him. Now, he did it with a smile in the end, but there's a few things that you've got to take into account. They didn't, because we spoke about SafetyCulture a couple of episodes ago where we had pointed out about the slowing growth, and I made the prediction around CEO, and Aaron made some rude comment.
I did talk about their ultimate demise, but it's good to know that Blackbird heard us and readjusted their portfolio val on the back of it.
But this article doesn't say what it's been revalved to. But related was there was a article in the AFR that says that eucalyptus is said to be Australia's next unicorn. I must admit, I was a bit surprised that they weren't already, but I guess their business model is a little bit different. But the article says eucalyptus, the startup behind online weight loss brand Pilot and Juniper, is set to join Australia's unicorn class. It's expected to clinch a 1.37 billion valuation and the backing of big-name venture capital and superannuation investors in the latest funding. Sources said the unicorn, which has already expanded into 3 offshore markets and is the forefront of the mass marketing hot weight loss medication such as Ozempic, now has its eye on further international growth with its acquisition war chest topped up. Yeah, eucalyptus was last valued at 560,000. Jack, do you know anything about this company?
Oh, no, not anything more than you guys, but like Tim Doyle's a beast of a founder.
That's what I was getting at. I was waiting. He is though. You look at his social media, you look at his interviews. If you think of like authentic energy that's here to get shit done and ain't here to fuck around and care about what the masses think, to me, he just exudes that.
And you can tell he's like a very intellectual guy, like, and the way he attacks problems are from first principles, like the way he breaks things down. And that's why, like, let's say Ozempic falls off the trend, like I still backed him to then find a new product to get to $100 million in revenue in 12 months. Like he's that type of guy.
Yep. There's a confidence meets competency meets taste meets execution. Like it's that foundational. Ash?
Oh, I saw him speak at South by Southwest. God, it must have been 3 years ago, and I still remember it. So I think that says a lot. I think the key thing I took away was he went through a whole heap of really interesting strategic initiatives and how he thinks about business problems. But he said, I'm talking to every founder and startup employee in the room. If you are not excited by what you are doing, come and find me. We're hiring and we're going to be a unicorn. And like, that was how he ended it, along those lines. And I was like, yep, love it. Founder energy.
Bloody good.
You're on mute, Don.
I think Aaron's internet has shit itself. Or was I on mute when I asked Aaron if he had anything?
I have nothing.
So we were talking about competence before. Going to demonstrate some incompetence every now and then. Incontinence.
I feel like with the 2 date weeks, you're not one to comment on this week.
What do you mean? It's all I said to my wife was it's been quite a stressful end of the year and I haven't had any fun for quite some time. And so she's come up with something additional.
I mean, that's really cute.
Cute.
Which doesn't feel brand aligned to you, but I guess that's Libby, not you. So
Yes, I think the credit belongs to Libby.
Yeah.
also, like, fun. What are you talking about? You have fun every day.
That's what she said. And it's like, yeah, you go.
Did you go to Morton like last weekend with like Aaron and Mikey Metcalf?
Yeah.
Wasn't that fun?
But I've gotten into where I couldn't switch off because there were so many plates to spin, and you can do fun things, but are you there having fun? And I just made a bit of a comment, and we had a conversation about it. It's a function of the end of the year. It's November. I don't know what it is about this year. I think it's worse than last year, but yeah, we're trying to raise a fund. We've got, how many transfers have we done on deals recently? We've got portfolio support stuff. All the stuff that we're trying to sell over, So yes, Ash, intellectually on the outside of it, it looks like one should be having fun, but if you can't be present and enjoy it, you tend not to be having fun. But when you have a darling wife who steps in and says, okay, I've got an idea, I'll take it with both arms.
That's sweet. Go Libby. Gold star.
I'd like to fuck off for a month, but I don't think the babysitter's going to accept the children. Well, somebody's been having all that much fun recently, but came through the other end is EVP. And I like Dan Zeckley's post. He said, brought to you by the team that famously dialed 000. we are pumped to announce EVP's Fund 5. And EVP has raised $100 million new fund, which is the largest fund to date. I think the AFR says that it's turning the page on strong room AI. EVP has weathered the most tumultuous period in its 10-year history just after it called the police. The firm is obviously still pursuing strong room AI in federal court. Howard Lieberman, who founded EVP along Les Zeckley. I have the privilege and the pleasure to be on a board with Les for almost 10 years now and have learned a lot. He's a very good investor and an amazing human. Howard said, "We certainly got tricky questions. We've been as forthcoming and transparent as we possibly can be, and I think they've been supportive of the way we've managed this. It expects to finalise the fundraising effort before Christmas." Yeah, I think this is, EVP, A are great investors. B, with the amount of time I get to spend with Les, they're a very, very values-centred firm, and their investors have stuck with them because they took the high road, which is often lonely and expensive, and I think it's going to pay off.
Totally agree. When I saw this post from Dan, I absolutely loved it. Like just owning it in the first sentence that they are the ones that called 000, not hiding from it, like owning it with pride. But also what I love, like they're pretty close to, my understanding is they're pretty close to actually closing out their commitments. So this isn't what we would often see of a fund announcing that they're fundraising, like we do. They announce it once it's done, which is pretty impressive in itself.
That's a good point. The moment you started that sentence, Aaron, I felt
You resemble that sentence.
That's good. Jack?
I think this is a textbook example of demonstrating trust and respect. And it's something that we always talk about, Don, and what we want to try and get across to our LPs. And when you've built trust and respect, it's much easier to then pass on a deal and for them to have conviction to go in. And I think what happened with Strong Room is like a great example of then turning a negative into a positive. They've just totally reversed it and then maintained, or even if not reinforced, the trust and respect with their LPs.
Yeah, 100%. It's living your values properly, not just having them on the wall.
I was just thinking of a couple of deals we've said no to after actually calling capital from LPs, and knowing that a couple of investors, even though we had said no, ended up investing in those companies that we said no to. And then so far that's proving not to have been a good choice on their part. This really is a game of trust. Like you have to respect people enough that they will take their course of action. But it is interesting the human interest and how it plays out in this space, and holding true to values is so bloody important, because this is a long-term game, and you're talking kind of 10-year event horizons. The other thing, I didn't realize EVP, did you say that they're 10 years old? I thought they were actually much older.
Yeah, it feels like EVP's been here forever.
Only 6 years older than us.
Yeah, that can't be right. Maybe it can be. I met with Howard. I think I met with Howard originally in probably 2015, and Les and him were like in the throes. Maybe it's 10 years since the first fund, but I'm going to call Les tomorrow anyway, so I'll ask him. Well, I'm mindful of time. We're going to do a quick theme of the week and a very quick Sharts. Who wants to kick us off a theme of the week?
Chaotic.
Is that it, Ash?
That's it.
I like it. Mine is, for all the advances in tech, humans are still the weak point. So sitting at the house today waiting for tradies, like a couple of them now have this really integrated technology. They automate the message the day before, confirm your booking for 8 a.m. This morning I got the notification that tradie Noah is on his way to the house. He'll be there in 31 minutes. You can live track his blah, blah, blah here. But then 1 hour later, the guy's still not there. Click on the live tracker. It shows him around the corner, but it also says the job is done. The guy eventually shows up and he's like, "Oh, sorry, mate, I just stopped for a coffee and whatever." It's like, you can have the great technology, but the human is still the weak point.
Yeah. Jack?
My theme would be getting over my fear of public speaking. So I can't really reflect on it right now, but hopefully next week it's a positive result.
So Jack, let's do a couple of things. One day you're going to be dead and no one's going to remember who you are.
No, I totally know this, Don. I'm trying to tell myself
Does that
this.
help at all? Does that help at all?
Like it makes sense, but I'm still so scared.
No, that's fair enough, buddy.
Everyone in the room has to shit. Like, they're all just the same.
As to what?
Everyone has to take a shit. Like, I just go to that. I'm like, okay.
That's a level above picturing people naked. That's like,
Because I don't want to picture some of those people naked. That's just frightening. But I'm like,
okay, I might go there.
I'm not
Nah, Jack,
picturing them
no, I get it.
shitting.
I get it. The older I get, the more you just learn that the reality is that your nervous system won't change until you practice doing hard things. And so you're doing exactly the right thing. And then whatever confidence you get here, it's going to flow into your personal and your fathering and everything else. So I'm proud of you, buddy. I think you'll do well.
Cheers, Dad. I'll keep everyone posted.
We can do some Superman stance before you go on, Jack.
I think we got to build your
Turn the
profile
nervous.
more, Jack. We got to get you out in the public domain more.
Well, mine is not unrelated to Jack's. It's around confidence and energy, and it's slightly. We've used this on the podcast multiple times. But when you're in the painting, you can't see the whole picture. And for somebody like me who really prides themselves on being available, the problem is you can absolutely lose sight of yourself and lose sight of your own energy, and it's just so important to not, I guess, be arrogant to think that you got all of the solutions, and sometimes you just got to say, I don't actually have a solution to this. And I've always poo-pooed people that have been too much on the energy and the fucking woo-woo and this and that. But when you just don't have the energy to go and do X, Y, and Z, you can just see how you fall behind. And I'm not saying you've got to go and Brian Johnson everything and turn it into an optimization thing, but yeah, so that's my theme.
Good job, John.
I like it.
So Sharts, we've always got energy for Sharts, Sash. Like you said before, everybody has to shit. Well, everybody
Everybody
has to
my
shut.
energy goes down at this point.
That's not.
Can I
Let's be honest.
excused from the table?
Let's be honest. More recently, you've liked them, haven't you?
Well, it could be slightly more factual.
Okay, let's see how we go. So we're talking about Bitcoin before. This is a chart of the weekly volume of Bitcoin-backed credit instruments. And for listeners at home, the trend is just up and to the right. So Bitcoin is being used to back more and more credit products in the US, which sort of makes sense. I knew some people before the boom that got some US stuff where they actually borrowed against their Bitcoin and went and bought houses. They then learnt what a margin call was, unfortunately, and sadly they then had to go and sell those things because credit is credit, irrelevant of where it's backed. I think this should scare the shit out of everyone. This came out today. Australia's headline inflation was actually 3.8%, and its underlying is like 3.3. It was well above forecast, and it's now the third month that it's well above the RBA's target. I don't see any interest rate cuts coming, and I fear interest rate rises. Not only fear, I'm prepping for them. Like a body in motion tends to stay in motion, and just the world that I'm seeing that I live in, we are in this reflexive loop of bloody pay increases and spending and development and house price appreciation and high immigration, like insert all these things here. That's going to affect vowels. That's going to affect capital flows. It's going to affect growth rates. It's going to affect all sorts of things. So just be mindful. Put your hand up if you've recently just taken out a massive mortgage. And Aaron's got two heads up. There you go. As I said, we were discussing the other day, Chris Rock, when interviewed and asked, how did you get so successful? Chris said, I bought a house I couldn't afford and I had to work my ass off. So
There's truth
across
in
all
that.
of us.
It's going to be interesting to see the Christmas spend data this year, because people are saying, like friends of mine who are in hospitality, they're talking about spend being down and discretionary spend being down, but I'm not really seeing it elsewhere.
Yeah, right. It's going to be, I don't know. I'm interested. And so this is a chart of the Buffett indicator, the total US stock market capitalization to GDP ratio going back to 1970. We've talked about this before, but the dot-com bubble from 2000, it was 136. Now we're 219. But this chart, this is looking at the dot-com bubble 3 years before it burst. So that's 1997 to 2000. And it went from effectively an index the baseline of 100 to nearly 400. But the 3 years after ChatGPT's release, we've only gone on a relative basis from 100 to 200. So we're still not yet at the euphoria of the last big tech bubble, is what this chart is sort of saying. But at the same time, there's still some warning signs. So I think a few episodes ago, I talked about breadth. And so breadth is about the number of S&P 500 companies that are actually going up on an up day. And we've now had the third worst, and that was only eclipsed by 1998 and 2023, where less than 160 of the S&P 500 went up on an up day. That means 340 of those companies went down. And so that's just one of the things people look at from a point of view of a healthy market. And this is similar to another chart that we looked at. This goes back to 1991, which is the total capital expenditures less depreciation as a percentage of nominal US GDP. And as you can see, it's sort of quite a trend. And in the run up to the last tech boom, capital expenditure ran up, and then it crashed just before the tech wreck. Then the same thing happened in the housing bubble, and then it crashed. Now, at the moment, the cloud and then AI build out is still growing, but I think watching capital expenditure, when this bad boy turns, the market will have probably stiffed it out ahead of us, but it's something to watch out at. But so far, we're continuing to rise, and we're still not, we've only just gone past the peak of 2000. But this is interesting. So this is a chart looking at the CapEx in GDP terms compared to historical investment periods. So it looks at the US railroads, UK railroads, US auto infrastructure, US electricity infrastructure, ICT hardware, and then the telecoms build out. And the AI CapEx projection is still a fraction of previous GDP CapEx build outs. The only thing in my mind is that when you build a railroad, the thing's down for like 100 years. You build a data center, how long do those chips last? So I just see that these comparisons might not be very relevant because it's not the long-lasting infrastructure.
I wonder as well, like, what are the maintenance costs? There's obviously fuel for the train, but then like energy for the data center and how that stacks up against each other.
Yeah, true. No, that's a good one, Jake.
And as a percentage of GDP, like the railroads post-railroad implementation increased GDP. And then you look at the world now and the AI efficiency gains. I just wonder if it's skewing it a bit.
Yeah, is it different this time? Who knows? This is a chart showing the total active residential bonds in Victoria, the annual change. There's a lot of landlords getting out of Victoria. Victoria is just a shit fight for a whole host of reasons. I think James Packer, what did he call the ex-premier? Excrement? Wasn't far off, wasn't it? Excrement of a human being?
Yeah, I think that was it.
Yeah. So this is a chart. This is men's happiness by marital status and children between the ages of 18 and 55. So for the married cohort with no children, 29% are very happy. 51% are pretty happy being married with no children, but only 49% are pretty happy married without children. And then the group that's the most not happy, interestingly, is the ones without children. That probably makes sense. I mean, fuck, they test you, but deep down. Ash listening to us bitch and moan, though, I think has a very different perspectives.
But how would you categorize Ash in this case? Like, she's got 3 kids on this call that she's got to work with.
Yeah, that's true. Now, for the unmarried cohort, the unmarried group, having no children is by far the happiest group.
Hang on, unmarried.
The happiest group have no children.
Oh, yes, sorry. Reading it around the wrong way. Yep. And the unhappiest group are the unmarried with children.
Yeah, I'd be unhappy. Fucking hell. If I was a single father. As one of the things, Ash, yes, I went to Warden Island with Aaron, Benny, Mikey, Hales. But as a single father with 2 of my own children, Benny, bless his cotton socks, actually needed to intervene at one point because he's pretty sure I was going to give myself a heart attack. because when Maggie had spent the second day carrying on, any time a fly came, would have a meltdown. Fly. It's like, so yes, I could well imagine if I was unmarried, then I'd been real. Anyway, back to business. Share of Catholics who attend Mass every week or more. This is by generation. And as the generations go on, the percentage is falling. But have a look at since COVID. The millennials have gotten all religious. What's up with that? It's gone from 15% to 20%, whereas every other cohort has sort of tended to fallen off. So is there just an unhappy group of millennials that
Yeah, they can't buy a house.
will drive a car? And that's it. What are we looking forward to?
Runway
Tunnel
tomorrow.
Oh, you go, Aaron.
I was just going to say the runway event tomorrow, 10:13's event. Really looking forward to that. Joel Pobar first up on the schedule. And then a lot of AI in the morning. I'm really looking forward to that.
Can you guys make sure you go to the strong room AI talk?
Yeah.
No, it's going to be great. I do have to, in the middle of it, take Matilda to an appointment, but I will nick out and nick back. But no, I'm looking forward to that. Let's see if I can get it. You go.
I'm looking forward to our event tomorrow. Being out and about, chatting up on stage, filming Jack, absolutely crush it.
Yeah, I'm looking forward to 3 o'clock having a beer afterwards.
You'll nail it, Jack.
You've got to settle at least 3:30 when I finish. I need the moral support.
Yeah, I'll be there, Ash.
Jack, it can't be more embarrassing when I thought the thing in the calendar was a tribe pitch. So I've joined in and there's like 8 people and I've gone, oh, fuck, this is a lot of people. I've never seen this many for a pitch. And this guy goes, oh, yeah. And then I'm like, oh, is anyone else from our team coming? And he's like, oh, I've got no idea. And then I'm like, something feels off. It turns out that was actually an investment call from another fund that I'd been invited to. It wasn't a tribe's pitch, and everyone's looking at this absolute lunatic. So that's sort of a certain level of embarrassment, Jack.
Yeah, no, we'll be right, Don. We'll be right.
All right, Aaron, I'll see you this afternoon.
Sounds good. Thanks,
Thanks,
team.
everyone. Hang on. We were about to end, and then Ash, what are you doing, Ash?
I asked GPT what my 5 worst traits were,
Yeah.
and the first ones I said weren't mean enough. And so the first 2, my entire family just started cracking up at. So number 1 is you are impatient to the point of being intimidating.
Yes.
Number 2, you
Sorry,
think
I
you've
thought there was
communicated.
nothing surprising. Anyway, keep going.
Number 2, you think you've communicated clearly when you absolutely haven't. You assume people are psychic. You give a half brief, they get annoyed when people deliver the wrong thing because they can't fill in the gaps that you think are clear. The first ones I was like, oh, that's not that me. And then the other one I thought was quite funny was you can be dismissive without realizing it. If someone has no idea, is too slow, too basic, or not ambitious enough, you don't hide your reaction. People feel stupid around you more often than you think. You don't soften your feedback, you just move on.
Good, Ash.
Yeah, they're a cracker, Ash. Here's one. You chase 47 things at once and convince yourself that you're focused. That's not actually true. I think I'm pretty honest that I'm not that focused, aren't I? Or are you going to call bullshit on that? Do I hold out a mantle that I'm some amazingly focused individual?
Verbally, but then still commit to stuff as if you're going to be focused.
And that's true. You overestimate how clearly other people can understand you. Yeah, probably true. In your mind, your ideals feel crystal clear. In reality, people around you often need 4 to 6 explanations before they even know what the hell you're talking about. You assume alignment far sooner than it actually exists. You expect other people to operate with your intensity and then silently judge them when they don't. That's interesting. If I'm silent about it, how does
How does it
GPT
have
know?
that insight?
Well, you're probably silent to them, not to GPT.
Yeah, maybe. Okay. You struggle to sit with discomfort without immediately fixing it, reframing it, or philosophizing it. I could probably go with that. You intellectualize your feelings to avoid feeling them. Probably. It says you're very good at talking about emotions, less brilliantly letting yourself feel the messy, inconvenient ones. So I'll talk to my darling wife about that tonight. But there's a few places in the sunny coast that would beg to differ. You have founder syndrome, even though you're not the founder. What?
I like that one.
Oh,
Depends how it defines founder syndrome, but
Well, it says you want influence, not because you're power hungry, but because you genuinely think you can improve anything.
I think there's some truth in that,
Yeah.
fair enough.
which isn't necessarily a bad thing.
And then finally, you think in big arcs, but sometimes you ignore the boring details that make those arcs real. Yeah, no shit. What's with the detail?
I had one similar on detail. Oh,
Okay, who's next?
have you done yours, Jack?
Yeah, mine. Great. First one's
Tell it to
impatient.
Nina.
Yeah, I did. But it just gave me the same ones back, but rephrased, but they weren't any better.
I'm trying to be mean, but Jack, you're just so wonderful.
So yeah, it's impatience with process. So that wasn't that great. The other one was overconfidence with your edge. So it's you often assume you can out execute structural risk. Sometimes you can't. That's me feeding
Okay.
it like go to market stuff, saying like we can outperform it. So that's I'll call that one. Scattered focus, fair. Bias towards action over reflection. Yeah, we'll skip that one. And then the tolerance for ambiguity can spill into vagueness.
Considering I asked for some documentation on some things today and we didn't have it, I would,
Yeah,
that's fair. Aaron?
I think we have a pattern in our team because some of these overlap, but impatience that becomes counterproductive, bias towards control. You push for high standards, but then you slip into doing things yourself, which caps leverage. So I do it. I cap, over indexing on intensity. My all-in mode is powerful, but it makes others hesitant to challenge you, which reduces surface area for new ideas.
I can see that one actually.
Quick dismissal of nuance. You want the distilled version fast. Sometimes that means you miss weak signals or slower burn opportunities that don't fit a clean pattern. Uneven patience for people not wired like you. High performers energize you. Everyone else drains you. Yeah, well, that's fucking true. There's something wrong with that one. I'm going to play around with that. I want it to be more brutal.
I literally
then-
said be meaner. The first ones weren't as good. Yeah. It's a
There
good
you go.
exercise.
All right. I'm going to go achieve what I can achieve so I can get
Beware
stuff
of your
done.
bandwidths.
So I can then think in big arcs as a founder whilst contextualizing my feelings, sitting with no discomfort, operating with huge intensity and overestimating what people understand of me. So that's what I'll go do.
All right. I'll roll my way there, unintentionally shrinking the room.
Right. Yeah.
See you.
All right.
There you go.
Bye.